UPBOptionMillionaires.com Tuesday. It is September 1st, 2015. S&P 500 futures are down over 2%. Look at the decline. Really started before the Chinese data even came out yesterday after the closing bell. Markets closed, futures plunged, and then the Chinese data came out, and we plunged even further at the European markets open. We're pulling back, continuing a downward trend that started Sunday night. We had the plunge overnight. Continued that weakness. We had a bounce briefly in the day to get us back into positive territory that was short-lived. You see futures continuing to head to the downside. You know, something you want to look for, a longer-term perspective. We're heading back to the October lows on S&P 500 futures. That's something we didn't even surpass the market crash last Monday. Got a little more room to go, or is this just merely a 50% retracement of the move we had off the lows throughout the middle of last week? If you want to look even further back, we go from a 3-year daily here. You can see support certainly at the October lows. We break through that. That's going to set up significant weakness to the downside. But I also want to show you a couple other charts here before we really get into where I think the market's headed. If you want to look, the U.S. dollar index continuing this range-bound action here after breaking the triple digits earlier this year. The parabolic rise we saw really corresponded with the market crashing in crude oil. But crude oil had a tremendous day yesterday. But if you look at the consolidation here, narrowing prices, when you get the prices starting to narrow up, we're setting up for a sharp move either higher or lower. So we'll wait and see when that happens. We're still in the consolidation phase here. But yeah, look at crude oil futures. What a spike to the upside we had yesterday. Continuing that theme, this is the Viagra candle off the 2009 lows. Actually, if you go back even lower than 2009, we broke the long-term trendline support. We're down almost 3% again here this morning. We were down 2% yesterday. We're going to bounce. If you look at it, it remains here even in spite of the pullback, supported about the 47 level here for crude oil. So we look for a move continuing to the upside, which also boosted energy yesterday. I want to show you something real quick because, you know, if you trade a lot, you got to have a software that keeps the annotations saved, because I haven't looked up DIA in quite a long time this morning, just going through some of the ETFs here. DIA came perfectly to its long-term trendline support at last week's market crash. Actually, if you look at the monthly chart, so want to go back even further, you can see where I draw this trend line goes all the way back. It's a really key trend line, came precisely to it. So that's something to keep an eye on here going forward. You can see it Monday perfectly, that wick, the lows came right to that support line. Of course, we're going to start heading lower. I think Dow Jones Industrial Average Futures down over 285 points. What a decline. So let's look at some individual names. FCX comes to mind here because I know Carl Icahn took a stake, rallied big on Friday, moved up to over 12 after the bell on Thursday, opened at about 11.50, pulled back on Friday a little bit from its highs. But this morning, an analyst who actually upgraded the stock back in April from Citigroup, upgraded the stock here, says a compelling valuation. You know, risk reward looks great, and then it plunged 50%, more than that actually, if you go from 23 down to 8, and now says not a buy anymore. Not the risk reward is too great. It's pretty amazing, isn't it? It's kind of like the weatherman telling you it's not going to rain, and then when it pours, says, "Hey, you should have brought an umbrella." Needless to say, I am in some FCX calls solely from the Icahn stake, because I do think this is a stock that's headed to zero. If you listen to any of my videos, market recaps, I've been saying it actually for quite a long time. If you pull back from a 5-year chart perspective, you can see the head and shoulders pattern has come in. We broke, again, I was talking about the narrowing range. You see how we narrowed in here? And that was the collapse, and I think this is the CLF of 2015. But these stocks that have significant weakness do indeed bounce, and that's what I'm trading for. A couple other things I'm going to bring up. XLE. Something to keep an eye on. Look at this reversal here. To me, this is a nice candle reversal. You know, everybody was talking about a bottom here and here. Oh, here we bottomed. But this might be a little bit of a bottom that we can work off of here, at least in the short term. If we get a dip here this morning, I might look to get some calls here as the week progresses. We can see move back up to 70. This is a nice bottom. I like this bottom. You ladies listening out there, this isn't no. All right, so let's look at LinkedIn, and you can see it's broken below long-term trend line support on a couple levels here. And wow, you know, the price action's actually been pretty nice for LinkedIn in spite of some of the weakness we've seen in the market. This is really a muted kind of reaction to the downside. So that's something I think you keep in mind from a positive perspective. Also, JP Morgan Chase has a price target up here at all-time record highs. 280 just announced that a week or two ago. So that's something to keep an eye on. But if you look at the chart of LinkedIn, looks terribly bearish here as we've broken below trend line support on a couple levels, which will now act as resistance. So to get above the $200 level is going to be really tough for LinkedIn. Going forward, also Google, I think JP Morgan Chase is bullish on that as well as Goldman Spectacular, which put it on its Sector 1325 buy list. I don't know what they put it on. But anyway, the analysts are very bullish on the stock. They weren't as much bullish on it here as it's consolidating. But after we had that 25% move to the upside post-earnings, they get terribly bullish. But if you look at the chart, support rests at this trend line that it could not break above for how many years? A year and a half. And you can see it came to this trend line before bouncing back up, and this looks poised for the $700 figure heading into the fall. Of course, the market weakness that we're seeing right now is going to drag everything down if indeed it does continue to happen. This morning, Apple is lower. Yesterday, an analyst came out, still sees it up over 130, 140 at year's end. So we'll see if that happens. Look at this reversal candle. I mean, that's something, a sight to behold. And I've talked about this in years past with Apple. I mean, this candle here in itself could be signifying the end and the start of a new wave to the upside. Of course, that remains to be seen. And we're just going to have to wait for the dust to settle here. Lastly, I'm going to bring up the VXX. We've been laughing at you, Mr. VXX. We've been smacking the tray out of your hand. You've been picking up your books. We've been putting gum in your locker. But here you are. Look at this, folks. We're going a 5-year weekly. Who would have thought we'd actually see, look at this. I mean, you don't even need a magnifying glass for that. We're starting to get some upside here. Of course, the odds of it heading back and recovering those 99.89% losses that you have from going long this back in the financial crisis 2009, pretty slim, but it's nice to see you, getting rid of suspenders, taking off that white tape on your glasses. You're finally growing up. Mr. VIX, UPB here, OptionMillionaires.com. I'll see you in the chat room, everybody. Have a great trading session. Tony the Tiger here. Goodbye.